Hey guys, welcome back to the channel. My name is Timothy, and on the channel we speak everything personal finance. In today's video, I'm going to give you 10 simple ways to take control of your finances today. So the first thing you're going to do to improve your finances is to create a realistic budget. Now, if you've seen videos on my channel, I talk about budgeting in almost every video. Budgeting is super important, and when you budget, you're able to track your expenses, you're able to track how much money is coming in, you're able to track how much money is going out. So we need to create a realistic budget. Now, in order to create a realistic budget, we need to know how much money is coming in. So you have $4,000 coming in, and we need to figure out how much money is going out. So you have $3,000 or $3,500 going out, which means you have about $1,000 to $500 to save. Now there's rules that you can use, and one of the rules that I go by is the 50-30-20 rule, which I talk about all the time. 50% of your money going to your needs, 30% going to your wants, and 20% of your money going to savings. So you need to ensure that you make a plan that's realistic and sustainable. So be realistic with your budgeting. Don't put $500 for going out to eat when you make, $2,500 or $3,000 a month. You have to be realistic when it comes to your budget. And the second thing you're gonna wanna do in order to take control of your finances is to build an emergency fund. Now, building an emergency fund is super important, especially in times where things aren't certain, where it's not certain whether you're gonna have a job the next day or the next month. You need to have an emergency fund so you can prepare for emergencies. Now, whether that's a car breakdown or whether that's a medical bill, you need to have money put aside so when these emergencies do happen, because they will happen, you're not relying on credit cards and going into credit card debt, and you're not able to pay off that credit card debt, and then you're paying interest of up to 20 to 30% on the money that you spent on that credit card. With an emergency fund, we want to save at least 3 to 6 months worth of expenses. So we have to get our bare bone expenses for 1 month. So how much are you spending on groceries? How much are you spending on housing? How much are you spending on insurance? How much are you spending on gas? And we want to add all these things together. All these necessities need to be added together. That will give us how much we spend in a month. Then you're gonna multiply that by 3 or by 6. So yes, these numbers can be pretty large depending on how much your expenses are, but we just have to really work, and that's why budgeting is super important, so you can know how much money you're able to actually save. So this number is definitely going to be large. For example, our 3-month emergency fund is about $7,000, and our 6 months is about $14,000 or $15,000. So it's a pretty big number, and it's going to take some time to build depending on how much money you make in a month. But the best way to save for your emergency fund is by automating your savings. By automatically having money go to a high yield savings account, you'll be able to save that emergency fund super quick, and you'll be there before you know it. And talking about why automating your savings is super important in a few steps. And the third thing that you're gonna wanna do in order to take control of your finances is to pay off high interest debt. Now, high interest debt is talking mostly about credit cards, because these credit card debts are crazy. I've seen credit card debts up to 20, 30, 40%. I've seen people take out these payday loans, 100, 150+% interest on these payday loans. Don't pay these high interest debts off super quick, because if you're investing this money into the market, you're getting an average of 7 to 10% rate of return on your money. But with these credit cards, they're getting a rate of return of about 20 to 30% on their money because we're borrowing. So when I put these credit cards off, and I always talk about this, one of the best methods is 2 methods. That's the snowball method and the avalanche method. Now, the snowball method is when you pay off the lowest balance first, and then you snowball that money to the next balance and to the next. And then the avalanche method is when you pay off the highest interest rate first. And then once you free up these debt payments, you can just throw that money to investing, especially if you haven't started investing. And the fourth thing you can do in order to take control of your finances is to automate your savings. Now, I talk highly, very, very highly about automating your savings. I talk highly about automating everything. I automate my bills into my different accounts. By automating your savings, by automating your life, you'll never forget the water bill. You'll never forget the electricity bill. You'll never forget to pay your mortgage, because that money is going to be there. So automating your money is a great idea. And now I know some people don't like to automate their money because they might not have that amount of money in their account because it's already been spent. But that's why I put that money to a separate debit card that I don't even hold in my wallet. I don't even know what that debit card is. It's in the house somewhere, but I don't need to carry it because all the bills on there are automated. The money is literally never going to be spent because I'm not out here swiping that debit card. So just try that. Try to put your bills on one debit card, and then put that debit card somewhere else. You should have money going to that debit card automatically every month. And you definitely need to do this when it comes to your savings. You have to pay yourself first. So automatically distribute money from your checkings or from your main account to a high yield savings account. I use Ally. There's a whole bunch of different high yield savings accounts out there. Automatically move your money to your high yield savings account. And by doing that, you are guaranteed to save some money. I promise you, by automatically moving money to your high yield savings account, you will save money. And the fifth thing you need to do in order to take control of your finances is to invest early. Invest as soon as you can. Investing is one of the best things you can do for your financial future. Invest into stocks, invest into real estate, invest into whatever you believe in. Put money to assets that grow, but also assets that are safe. Don't put money into these risky assets. Put money into the S&P 500, put money into VOO, FXAIX, and all these different ticker symbols that track the S&P 500, and your money is guaranteed to grow. Compound interest is your best friend, and the earlier you start investing, the better. And it doesn't matter how much money you're investing. I mean, you just paid off this credit card debt, right? So you should have some extra money to invest. The money that you're paying off this credit card debt, you may never see. That money should automatically roll over into your investments, because guess what? You were living without that money before because you were paying payments on it. So just put that money to investing. And now instead of paying the credit card person, you're paying yourself. You're paying your future self. So start small. Put as much money as you can, $50, $100, $1,000, however much money you can put into investing, do it. I promise you, it's a great feeling when you start to see your investment accounts grow. And the sixth thing you're gonna do in order to take control of your finances is to understand how credit works and to understand your credit situation. Now, your credit score affects your loans and affects the interest that you can be paying on those loans. Now, if you have good credit, you might pay low interest on a loan. Now, if you have good credit, you might pay 6% interest on a house. But if you have bad credit, you might pay 8 or 9% interest, which ultimately lowers your payment. So you want to have good credit. I mean, credit is important, but it's not the most important thing. Having a good financial situation is more important than worrying about focusing on building your credit. Because to be honest, we only need credit to buy a house. I mean, we should be buying cars in cash because we should be buying those $5,000 to $10,000 cars. So we should really just use credit to buy a house. And the seventh thing you can do in order to take control of your finances is to cut unnecessary expenses. Now, what are we saving for? Are we saving for a house? Are we saving for a car? Are we just saving for our emergency fund? If we're going to save for these things, we want to get there as soon as possible. So we have to cut unnecessary expenses for a period of time. It's a small sacrifice in order to grow our financial future. So if we're able to cut back on going out to eat by $100 or $150, we can now put $100 or $150 towards our savings or whatever goal that is. So just be very mindful when it comes to subscriptions or impulse buys, especially if you're out and you see something you want, but you really don't want it. Just walk around the store a little bit, walk around the store one more time, and then ask yourself, if this is something that you really want, what kind of value will it bring to me? Will it make me happy? Will I be satisfied when I leave the store with this impulse purchase? And the eighth thing you can do to improve your finances is to diversify your streams of income. We can't just rely on our W-2. And this is something I'm still trying to figure out. How can I diversify my income? Because yes, I rely on my W-2 job. If I was fired tomorrow, I have my emergency fund, but I will have to go find another W-2 job. My income is somewhat diversified because we get a little bit of income from the real estate. It's not gonna hold us over, you know. A few hundred to $200 a month is not gonna do much for us, but it is diversifying my income. Now we do have, you know, some dividends that we get from the stock market. It's nothing. I have the high yield savings account and you get some money from that, but it's not a lot. So I need to figure out how I can bring in more income, whether from side hustles or other businesses, so I can improve my financial life. But I don't want to downplay the extra income that we do get. Even a small amount of extra income can help change your financial situation. An extra $100 to $200 can pay for your electricity bill, which frees up money that can be saved to your investments, or frees up money that can be saved to your high yield savings account. So just try to bring in some extra money, whether it's Uber Eats, or any other side hustles that you're passionate about. A little bit of extra money can go far, especially if you're in a tight financial situation. And the ninth thing you do in order to take control of your finances is to have insurance. Have the proper insurance in place. I pay $34 a month for my term life insurance policy. Now this protects my family, because if something were to happen to me, will my family be safe? Now $34, that's a subscription. That's $34 is really not a lot of money, but your family gets a chunk of money if something were to happen to you, and would definitely help lower the financial burden on your family. But also have the proper health insurance, have the proper car insurance in place, so if something were to happen to you or your car, that you're not held liable for the total cost. For example, we just had a baby and the delivery of our baby was about $20,000. Could you imagine if we had to pay $20,000 because we did not have any insurance? That would have been ridiculous. Unexpected events can literally wreck your finances if you're not protected. Definitely protect yourself with insurance policies in place. And the 10th thing you're gonna do in order to take control of your finances is to set short and long-term goals. Now we should always have a goal in mind. Like when we complete one goal, we should have another one already lined up. Whether that's a money goal, whether that's a personal goal, whatever it is, we should always have goals set up. Now, a short-term goal could be saving for your emergency fund. Saving for a long-term goal could be saving for that vacation, that big vacation that you want to go do down the line. So we want to always have some kind of goal in mind, so we have a path of how much money we need to save, or a path of how we're going to do something. We don't want to be out here mindlessly walking around, mindlessly, lost in space. We want to have a path and a goal that we're always striving to. Taking control of your finances does not have to be overwhelming. Small steps today add up to massive wins tomorrow. And you can start right now by automating your savings, paying off debt, and investing into your future. So don't wait for someday. Your financial future starts today. If you found this video helpful, hit the like button and subscribe to my channel. I'll see you guys in the next video.